boy! Oh yeah, CPI, CPI, CPI. Guten Morgen. Oh, that's a perfect little transition. Okay, I'll take it. All right, guten Morgen, how are you? Comment allez-vous? I don't have the chat running. Hang on. I need to bring up the chat. YouTube.com/Forex.Today. Don't say anything. Hold it. Don't say anything. Hold it. There we go. Oh, very little lag today. Good job, Google. Guess you got enough of the cards. All right, good. Where's the chat? I got to pop my chat. Almost there. Hang on. Hang on. I'm on the wrong page again. There we go. Now I can see everything. How are you doing? Sup, trucking mogul? Welcome, welcome, welcome. Very important day for the degenerate gamblers. Huh? For the degenerate gambler day. Yeah, it's going to be good. Get ready for some vol. Holy smokes. Yeah. All right. Well, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. And why would you do that? 'Cause trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I'm the chairman and president of the International Association of Retired Male Supermodels. Oh wait, wrong group. Welcome to Forex.Today. Look, I'm a master trader. Huh? Don't be a master debater. Be a master trader. Master of pips. So anyways, hey, we got the CPI. Everyone's worried about FOMC tomorrow. The end. Because we have the blue book and the green book and the beige book are all today. Which is staff projections and so on and so forth. But so, anywho, people are going to guess based on what CPI says today. Now, core may be 4 or below 4, let's say 3.8 on the core, maybe 3.5 on the core. Cool. But headline might be, what, 2.9? 3.0? It's going to be dramatic for somebody. But we will go through and we'll look at some serious details. Meanwhile, could you click the thumbs up button, tell YouTube this is quality content? May I be so bold to ask for something like that? Do you feel comfortable clicking that button? Hang on, I'm bringing something up. There we go. All right, so let me look in the right direction because you're probably curious, what the heck is he looking at? All right, so in the description below the video, while you're clicking the thumbs up button, I want to point you to resources. A trustworthy and ethical foreign exchange broker that doesn't trade against you. But it's not just foreign exchange. They have metals, they have energy, they have stock indices. Yeah. And of course, Forex for sure. I have a community called Investor Bootcamp. Been running that community for 20 years. First as FX Bootcamp, now as Investor Bootcamp. I think it's a fair deal, $88 a year. Okay, Free stuff. 90-minute lecture on trading stocks. There's a 90-minute lecture on fundamentals. How about something totally for free? How about, would you like me to review your trading, your technical analysis skills? Would you like me to review it for you and give you some feedback? Well, that's $500 an hour for my time. Oh, you're like, oh, I don't want to pay that. Well, I trained AI to give you my same opinion. You should check it out, dude. It's amazing. And it's totally for free. Okay. Like I said, I think I spent about $750 this month supporting tradeplans.ai. And for you, it's free. You're welcome. So anyways, chickadee checking it out. All that stuff is good. Makes the world a better place. Okay. Also, tomorrow, you might find this interesting. I am teaching a group how to be professional money managers. When I worked as a venture capitalist, I would do all my research. I'd fly the entrepreneur into our offices and interview them. I'd review all the patents. I'd review all the prototypes. I had a quant that did some basic, higher level market research for this type of product, like competitive analysis and, what similar products in the market and what do they retail for and what are their earnings and all that kind of stuff. And eventually I would make a decision that I would want to invest, and then I would put together basically a sales pitch for the deal, and I would take it to our board, our council. And the council, including the CEO and president, two different people of the company. Sometimes we'd hire consultants to sit on the board as well. And the company's investors, our company, our LPs would come in, not just GPs. Anyways, there'd be a board and I would pitch them and I'm like, I think we need to invest into this. This is how it works. If you want to work in a nonprofit, there are going to be stakeholders that are going to obviously review the money. If you're going to work for an endowment, or if you want this to be your family office money that supports you when you're retired, this is for you. An endowment is where when you die, all your money still exists. If you want to work for, if you have money and you want the money to provide income to your favorite charity or your church, this is a group for you. If you want real world business experience, you can put on LinkedIn where you say, this is, I manage money as an advisor. If you want to learn how to do portfolio construction and management and handle the macroeconomic and microeconomic issues and talk about rotation and rebalancing and knowing how to do all these things, this is for you. And tomorrow is our first meeting. So there's no Forex.Today live stream tomorrow. There's no QuantBox live stream tomorrow. The Council of Investment Advisors are meeting all day. There's no live stream for the FOMC interest rate decision. This is all day workshop. Okay. The CIA meets all day tomorrow. And we will be reviewing the portfolio. And then we will be rebalancing the portfolio. I put in $50,000 in cash in a corporate account at a major Wall Street firm, and you get to look at it. Huh? And I think there's $10,000 in cash. And I have to remind myself, I don't have time to remind myself, I might move some more money over there. I got to do that today. So there might be $20,000 or $15,000 that we need to deploy. Plus, I want to kill some of my investments and I want to potentially add to some of the investments. This is what the CIA is doing tomorrow. If you're interested in joining the group, there's only spots for 25 people. Okay? There are spots available. But here's the thing. It's a long-term commitment. If you ever join and then you quit, you can never come back. So anyways, very interesting. So I'm looking for a crew that's serious and wants to handle this like it's their own money. Okay? By the way, the cool thing about this group, we're going to, right? The cool thing about it is this money that I'm putting in is to avoid paying taxes. That's my evil plan. I'm going to avoid paying taxes and turn this into a multi-million-dollar trading account. Well, right? What do? Do you just pay taxes? Hey, I love paying taxes, but you got to play the game right. So I'll end up paying taxes after I start to spend it. Remember, the government's going to force me to spend it when I'm, 72 and a half? So I'm going to keep compounding this for decades and decades and decades. Yeah. Oh my God. And then I'll be forced to withdraw the money. At that point, I pay taxes. But imagine all the compounding and compounding, compounding and compounding. Cool. So anywho, yeah. Oh, and by the way, just so you know, if you don't know anything about stuff like this, I will teach you everything. I want you to pretend you know nothing. Okay? Anyways, that's tomorrow. That's real. We will probably move 10, I would say we're going to rebalance probably with $15,000. We're going to rebalance. And then we're going to probably deploy another 10,000. So there'll be a discussion of like moving about $25,000 around in the portfolio tomorrow. Trucking Mogul, click on the link, scroll to the bottom. Okay. The quick answer, $2,400 a year. All right. Yeah. Okay. Trader's Way. Guess how they make money? They provide you a service. It's called an ECN. Oh, my mouse is going all ape crazy on me. They're an ECN. Okay. See, STP, straight through processing, which means they place money into the interbanking system. Trucking Mogul, then it's perfect for you. Okay. Investment Bootcamp. Sorry, Frank. Investor Bootcamp. $88 a year, right? Okay. All right. So anyway, straight through processing, which means when you click buy or sell, they actually put it into the interbanking system, and it's a service. It requires an infrastructure. It requires oversight, all that kind of stuff. But from the service, they earn a small fee, very, very small. And so the only way they can really make money as a broker is that you survive as a trader and you trade for years and years and years. And therefore, they actually value your education. They want you to succeed. Where did my charts go? Wow, I have this running twice. Hang on, I will kill this one. What happened to my charts? Gee whiz! All hell's breaking loose today. By the way, they started something cool. While that was loading, I noticed this is my graduation, my first graduation. LinkedIn sent me an email. They're like, hey, we verified that you have a Harvard degree. And they put it on the profile now that they verified it, because there's lots of people now, they're like, I took a class on edX that said Harvard on it, so I'm a Harvard graduate. And they're putting this down on their LinkedIn profiles. And LinkedIn is calling bullshit on it now, which is, I think, good. So, great. So they've verified my degrees. And cool, I didn't even ask them to do it. It's kind of interesting. So we are now 10 minutes away from the big news. Okay, let's see what you're doing. There is a poll. Would you please answer the poll? But you got about 10 seconds to answer the poll. The more people answering the poll, the better the poll answering will be. If you want to see what the market is anticipating, answer the poll. Because you are the market. All right, boom, too late. You're slow as molasses if you didn't do it. Okay, so let's see. As expected is the winner chicken dinner. Let's do some quantitative analysis. I think I had it on that page I just killed. Let's go back. There we go. All right, let me zoom in. Okay. This is quantbox.co. And so lots of people are going to debate inflation, where it should be. Well, the only number that matters is this one. Fourth quarter of 2023, the mean, okay? The mean based on the Federal Open Market Committee's expectation of future inflation levels. They don't all agree. But when you add them all up and divide by a certain number, you get this, 3.4. So if inflation, okay, comes in lower than that, then that is good. Then we are beating expectations. And the Fed may feel like they don't need to do any more work. In fact, a lot of people will bet that the Fed could actually then cut sooner than later, which is a big change from October or September. But we already know that because we've already reviewed the summary of economic projections. So this is where the Fed stands. This is the Fed's expectations. This is not the market. You know when you read a calendar and it says the expected number? This is not that number. This is the Fed's expected number. I don't listen to the media. I'm too pretty for that. Instead, I listen to the Fed. Factual, data-driven analysis leads to factual, data-driven investing. It's decision-making, okay, based on facts. So anyways, there we are, 3.37, okay? Now, based on that, okay, and this is where we are at that same period, interest rates still at about 5.5, which is where we are. And this is the summary of economic projections, which is radically different. What it looked like 3 months ago, it looked like this. Let me get a similar color. It looked like this, dot, 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 dot. So there's a difference. It was flat and then down, and now it's down. And that's the difference. That's why this little move here, the change in the summary of economic projections by the Fed led to the stock market rally in November. Okay, that's why when you look at it, the market moved on November 1st. Hey, when was the last summary of economic projections? Oh, was it November 1st? Yeah. Okay, cool. So what we want to look at is tomorrow is, does this change or does it stay the same? Does it level out this way? Does it come down this way? And or is it the same? And that's the real news. But people are going to bet on this. So the betting will be, you know, I would look at it this way. And by the way, I say bet in a bad way. We're going to get volatility, but it's still based on some number was achieved and that's going to make people guess what the Fed's going to do tomorrow. I don't think that's wise, but that would be short term. Okay. That would be short-term volatility, and that's fine. You can scalp that. If you want to scalp it, you can scalp it. Great. Just remember, you're supposed to buy low and sell high. Chasing price like a dog chases its tail looks really funny, and it stinks. But you can do it. I'd rather you buy low or sell high, okay? But I don't want you to kind of guess. But today will be important. So my number is, if it's below 3.37, so let's say a headline comes out 2.9, that'll be amazing. Okay, core is 4, so if core comes out 3.8, headline comes out 2.9, people are going to place big bets. Okay? If it comes out higher than that, people will be severely disappointed. In the long run, it's all wrong. In the long run, I think the risk is that this future expectations are not quite right. And that in the future, this might have to be revised. So I think future revisions will look more like this. But that's for a later day. By the way, if you have QuantBox, it helps you line up strong versus weak. Oh, whoa. Yeah. Hey, why don't you pay the money? QuantBox used to have this thing called retail and pro. And retail people paid $79 a month. Pro paid $800 a year. I gave all the retail subscribers pro. You're welcome. Okay, there's yesterday's setup. Interesting, but let's get ready for the news. Let's get ready to rumble. Let's get this going. Why don't we throw down the 1 minute here? Oh, that looks so good. Oh my God, that's risk on. That makes me scared that it's going to go risk off, but people are already gambling on the outcome. Wow. How exciting for them. What is the official time? I think we have 90 seconds. That doesn't seem to be working. Let's put the Cinco. Let me try it again on the single. No. Yeah, I got access. All right, so let's move Dixie down to the fiver. And yeah, that's that. So I'm going to just do it this way. Let's take a look at these two funding assets. I don't want to do Swissy. Swissy's on its own thing. Okay. Down is good. Up is bad. We got less than 1 minute to go. You guys excited? Click the thumbs up button. Yeah, let me hear your roar. Roar. Okay, we're spinning. Oh, whoa, I'm spinning. So, right, we want core below 4. We want headline below 3. We want dollar weakness. We want, yen. Well, yen is stuck too. Really, I'm only really watching the dollar here. Roll in, roll in, roll in. It's coming, it's coming, it's coming. Any second now. Wait for it. 4 as expected on core. 3.1. Okay, but not great. Okay, but not great. Okay, not great. Okay, but not great. There might be some disappointing in that. Nope. So far, so good. So far, so good. There was a little bit of a glip there. 4.0 on the core, so that's not good. We wanted lower than 4. 3.1 on the headline. Could have been 2.9, but no. People are like, okay, good enough. I want to zip over now, check out the stock markets. And now we're hitting target on tech. Okay, hitting weekly target on tech. If you're a member of Investor Bootcamp, you know the seriousness of this. Okay, let me move. I got to move. Give me the juice. Okay, we got upside on S&P 500. Once again, daily and weekly targets being achieved. Okay, profit taking happening. Be careful. Remember, just remember. I've forgotten what to remember, but remember. All right, Dow. Okay, look at that. Very impressive. I don't have weekly targets on here, but we do have that breakout scenario. I'm going to change the grid here. Let's go to bullish confluence. And we are through the targets. Okay, going ape crazy here. Next level of profit taking at 36. Or this is about to just collapse like, I don't know, like a ballerina standing on her tippy toes with a bowling ball above her head. Okay. So anyways, 3.1 is better than the 3.37. Remember that? Do I still have it or did I kill it? Oh, this is a different iteration. I know what I wanted to do. Central bank report. Then I got to pull up dollar. And I got to do my zoom. So what I was saying, we had, where is it? Q, that's the next one. Okay, 3.37. So we're below the 3.37. 3.1 is better. And so someone might say, hey, man, that's good. That's better than expectations. And therefore, the Fed can cut. Therefore, everything rallies. But the problem with that is core, which is the one that if the Fed was even going to look at this stuff, they would look at core. And you might argue that they want core to be below 3.7. Or 3.37. And we're nowhere near that. So for the other half, it's disappointing. And so this is where I said you either buy low or sell high. There are sellers here. Okay? We don't know how many. Is there enough to end the uptrend? Well, a lot of the sellers are bulls. They're using this to get out, not to get in. We call this an Arctic turtle sometimes when they make the big stretch and then it collapses quickly. Very cool indeed. Let's check a look. Take a look and check commodities. Okay. Yeah. Remember that? Huh? Remember that? Chasing price does not pay. Let's take a look though. Is there an opportunity to get in if you wanted to be a bull? It's a little too low for me. So I would wait. If WWWD, what would the Wayne do? The Wayne would wait. Okay, Here we go. And we got no follow through from our trade from yesterday. Okay. And maybe we owe everything to the average true range. Sure. All right, let's move. Okay, now we got to take this over. Okay. And I don't think I can reach that. There we go. And now we're more apt to be in the sideways range. So, you know, you could move it visually like this. Okay. Now bears, you don't have a lower low yet. So there's nothing really to do. And a bear might say, well, I want to sell in this zone. No, that's a trend trade. We don't have that yet. We have a range set up. So anyways, well, that's disinflationary. Benson. South Africa. Yeah. Huh? Seatown or Joburg? Somewhere else. Yeah, so Jambo Benson. Hello. Salong's in the house. Yeah, so remember what I said. You're either a bull or a bear. And everybody else just chases price. And they spin around in circles like a dog chasing its tail. And look what happens. If you bought it because it was a giant move up, okay, you got crushed. What happened on the initial move? There were buyers here. Like, put it this way. Somebody else. Let's try to figure out what creates this price action. Okay? Somebody else said that there's support sort of in this zone, right? And then somebody else said there's resistance up in here, right? So what did happen? Buyers bought low, sellers sold high, and retail's doing all this nonsense somewhere in the middle, right? And that's why pigs get slaughtered. Because, okay, what happens is bulls take these guys out, but also bears take these guys out. You're fighting on two fronts. Huh? We all know what happens if you fight on two fronts. Okay? Okay? All right. So anyways, whoa. And the stock market's not even open yet. Okay. Yeah. Very neat. Very neat. Very neat. Neat. Okay. Might want to go out a little more and just find out where we are. Okay, based on today's price action, this is the expected day. And if this continues up, this is, okay, tomorrow's buy zone. So that's kind of a little bit what's going on here. But you could just as easily, because remember, this is not really technical. This is a vol trade. You could end down here and still be a bull, which is weird because you get a lower low, but it's the vol, okay? But just be careful. So now you got to mark this range, you got to mark that range. Buyers buy low, sellers sell high. Pigs get slaughtered. Okay? Well, it's not bearish yet, Dixie. It's not bearish yet. For example, it cannot possibly be bearish without a lower low. Okay? And then I wouldn't be a bear until it made a lower high. So if it did something like this, then I would assume the lower low. Now, my risk is that it just moves on off of this level of support. So now I have to define my risk and put a stop there and say, I don't want that exposure. So now the distance from here to here has to be measured. Let's just pretend it's a currency pair. Let's say it's 100 pips. So therefore, I need to make sure that the distance from here to here is, let's say, minimum 200 pips if it was a currency pair. Like, there should be at least a 2-to-1, preferably a 3-to-1. Okay? But it's not bearish yet. And in fact, if this is typically what I do, like if I wanted to be a bear on the S&P 500, and I can think of 9 reasons why it could. So I'm not saying it's not. I'm just saying it's not yet. What I would prefer to see before I become a bear is not just this, but really a double top of a double top. Okay, we need to turn the battleship around. It's not that easy. Takes a while. Okay? But I'm telling you, the fact that core stayed at 4, that's bad news. Remember, I yelled that right immediately. I'm like, that's not good. That's not good. 3.1 was better than expected, but it's headline. It's headline. Oil prices dropped. It had nothing to do with the Fed. So it is a disappointing number. No, this isn't far off. This isn't far off at all, Richard. It's behaving exactly as it would be expected. Like, for example, it can't be quote unquote not getting the reaction we're expecting when, and I have to back out a little bit here, I have it labeled. Let's try this. Snip. No, that didn't work. Oh yeah, there it is. Okay, let's try this. Okay, let's look at this. All right. I got to bring up my snip. And then we need to zoom. There we go. Control plus. Control plus. All right. So just making the comment, Richard, not getting the reaction we're looking for. Well, when yesterday it was posted on my charts, okay, that the expected top for a bull, which I am, I labeled well, the tool labeled, bullish profit zone, aggressive price. And then this is the result. Profit zone. This is where bulls get out. Okay. So then by definition, it can't be a reaction, right? Not getting the reaction we're looking for. Well, there's two reasons. That's just today's profit zone. The red here that everybody can see is the weekly profit-taking zone. So as expected, exactly at like we're looking for, we hit the target and bulls got out. So nobody actually sold. All the bulls took profit. And I think even on Sunday we talked about this in the day trading group, like people want to hit this target before Wednesday. Can anybody confirm that? Anyone in my day trading group? We talked like if they're going to do it, they want to get it done before Wednesday. So if they're going to push, they're going to push. Because they got to get it done before the big event. And they want to be on the sidelines. They want up and out. People are looking to get out. You have to understand this. There's another thing in the back of my mind. Back in January, I did an annual outlook. Right? And in the annual outlook, I suggested this week, not last week, not next week, this week, the week of 12/12. By the way, today is 12/12, isn't it? It is. My Vibiliquine watch says 12/12. It's French, made in Switzerland, so it must be good. Yeah, this is the week to get out. And of course, traders, we forget this because you want to trade every day, in and out, in and out. Every day is the same day, one after another, but not to an investor. So up and out before in the week of 12/12 is a reasonable day to start. Now, I think it was yesterday I used the analogy of harvesting. In this case, a vintner harvesting his or her grapes to make wine. What exact day do you start picking the grapes? That might have been it right there. Go. Start picking. Now, doesn't mean it's all over. No, but it could be. But we also know that many investors must take profit or loss between today and the end of the year. Do you understand that? That there's taxation issues going on. There's portfolio balancing, rebalancing, rotation. It's happening. You see it in the market. I've been explaining it for 2 weeks, maybe 3 weeks. Okay? And all of a sudden you're like, Nvidia's down, but the Dow is up. What does that mean? They're moving from high beta to low beta, as you would expect this time of year. Once again, a retail trader doesn't think this way, but these are the forces that's happening. So if you're making lots of money, congratulations. If you're not making the returns that you're expecting, and you feel like the market's misbehaving somehow, that's what's happening. Investors are thinking and moving money based on an entirely different universe. You're not even in the same universe. And you're trading what worked, the way you trade and the way you made decisions. You're trading the same way as you would in August, September, October, November. You're trading moving averages and you're using oscillators, and you're like, but all of a sudden they just stop working consistently, and all of a sudden they're like, you get caught in this mediocrity and you're starting to lose money because you're not getting the follow through. And you're like, well, I guess it's not going up, so now it must go down. So then you stop buying, instead you start selling, but then that doesn't follow through and it goes back up, and then you lose there. And all of a sudden, nothing is happening in the markets. You go through a week and a half of consolidation and you lose. So then you think the uptrend must be over. So you start selling, and then all of a sudden moves up again. So then you stop selling, you start buying, but then it stops going up. And you're like, okay. All right. Is this Forex or stock market? Okay, Devin, here's a great point, by the way, Devin. Why do I care about the S&P 500? Because it sets up all your currency trading. Devin, this is an example of of risk on or risk off. So I'm looking at one asset, and from this, you should be able to derive, Devin, whether you're buying the US dollar or selling the US dollar. So I look at this and I see 7 possible Forex trades. Okay? And that's why you look at that. Because I was on this screen. Let's go back to that. And it was weak, and then it popped back up. Yeah. Okay? And now we're back to maybe a retry. This is all the vol. So if you're watching the S&P 500, for example, you should be able to see, Devin, the Aussie dollar. Okay, what did the S&P 500 do? Okay, let me get off the drawing tool here. It went up, and then it stopped going up, and then it fell, and then it stopped falling, and now we're stuck in the middle. Yep. Okay, so what does this mean? It means, okay, as I suggested, okay, players pick where the support is, where the resistance is. They either bought it very low or they sold it very high. And retail in the middle loses. No matter what you do, you end up losing because you're fighting the bulls and the bears. You don't have a chance. It's 2 against 1. Okay. And how do you trade with just $30? You'll open up a demo account at tradersway.com, a demo account, and you get a job. And you trade on a demo account for, let's say, 2 years. Meanwhile, you take a job or a second job, and you work that second job for 2 years, and you save money. The little bit of money that you do spend will be in your education. So it could be my service for $88, or you can pay someone else $1,000. I'm going to give you more value, but whatever. But whatever money you take out of that account, you invest into education. In particular, I would recommend not technical analysis, because most gurus don't even really understand it. Instead, I would recommend understanding fundamental analysis and macroeconomics. And then, dude, just learn some basic price action. Get to know pivot points a little bit. And that's it. Don't worry about it. You don't need complicated gobbledygook technical strategies. I'd rather you learn macroeconomics so you can talk about the Australian economy relative to the US. That's fine. So, like, again, mine is $88 a year. So save as much money over the course of 2 years, maybe spend $88 per year on education. Okay. Maybe join a live group. But if you don't have, look, if you only got $30, right? So therefore, spend 2 years working a second job and saving capital. If you can't do that, you're going to fail in Forex anyways. It doesn't matter. I'm talking to a ghost. Here you come, here you go. If you don't have ridiculous, sickening work ethic, Devin, it doesn't matter. Yeah. Yeah. Okay, Devin? And that I'm being brutally honest in an attempt that I have about 5 seconds to help you before you're gone. In fact, you're probably already gone. You're probably not even here anymore. Cool. I don't know, there's a consequence on it, but look, you have to be unbalanced to be ridiculously successful. And then when you become ridiculously successful, then maybe you can find balance. So I'll give you an example out of my own personal life, which is, a hard thing to do or dangerous or whatever. But I apologized to my wife this morning. I said, I know I'm not doing a good job. I know I'm letting you down, and I apologize. Why am I doing that? Why am I letting my wife down? Because I am working night and day. I wake up at 4 something. I go to bed way too late. I wake up way too early the next morning. I'm not contributing very much. Right? What am I doing? I'm trading, and I'm right now heavily focused on the new upgrade to quantbox.co. I'm heavily focused on the Council of Investment Advisors. I'm spending a lot of time in contemplation about the fund that I'm launching. And then a million other things. I'm going from meeting to meeting to meeting. Right? So yesterday, I met with people from Pakistan. I met with people from Bangladesh, met with people from India, met with people from the Ukraine. And that's just one boring day. So if you started with nothing, you don't have much money, you don't have education, you're starting out, the number one thing you can contribute is working harder than everyone else and making sacrifices that are big on. It's hard, like being balanced and, sitting cross-legged, going and visualizing yourself floating through a golden triangle, doesn't get the work done. But the big sacrifices that are more important is how do you grow a $30 account into a $3,000 account? You get a job and you save. If you can't do that, it ain't going to happen. You don't have the skills to get rich. You don't have skills to get wealthy. You don't have a mental attitude of sacrificing instant gratification for actually creating value. You can't do that? You can't save for 2 years? Oh, having a second job is too hard? Spending time on education? That's an investment. Throwing down a $30 account trying to turn it into a $300 account, you will lose your $30. Thank you for sticking with me, Devin. Ridiculous, sickening work ethic, Devin. I will teach you. Okay? But it's not a get rich quick. Okay? And I don't know where you're from and all that kind of stuff. And your country might be awesome. Your country might suck. All those things are variables. I can't do anything about that. And I can't make you work like a dirty dog. But if you are hungry enough, then I think you need to go all in, but not all in risking money. You need to build a business. You need to refine lifelong skills and the attitude of sacrificing the glory of making a $30 account, a $50 account today but instead working hard to build a sustainable business so you can be a Forex and futures trader for the rest of your natural born days on earth? Imagine, Devin. So what you got to do is, if you're going to build a sustainable business that's going to last for decades, then you work a couple of years. I don't know how much you can save. Honestly, I don't know. Is it 300? Is it 3,000? Is it 30,000? I just don't know. I don't know. But the thing is, I can tell you the way the math works. Okay? The math is basic. Okay? You start with the amount of money you have at day zero. It's finance. Literally, you put year zero, you have $30. Okay? If you start now and you're patient and disciplined and trade properly, you'll never make any money. Oh, you can gamble it and turn it in from, I don't know, 30 to 300 to 3,000, but you'll lose it all. It doesn't matter. It's all nonsense. Okay? Just keep gambling. Las Vegas knows this. Just stay at the table. You will end up broke. No, I'm not thinking the worst, right, Devin? I'm not beating you down. I'm building you up. So what I'm saying is, put in the time, get the money. Like this is, if you were my friend, a family member, a son, if I was mentoring you, if you were my daughter, this is the advice. Build up your starting capital. If you can get it from $30, 2 years from now, you can put $3,000 in. Okay, now you're starting at year zero with $3,000. But what have you done for the last 2 years? You've actually invested in yourself, in education. Learn some macro, you could probably do it for free. Learn some price action, you can probably learn it from me. You can probably just come to these live streams every day and learn enough to be successful. That's why I do it. Okay? Cool. So imagine 2 years from now, you will be a significantly better trader than you are now. So imagine that that's part of your capital build, the value creation. The value of your company is nothing but capital and labor. So you're now labor to the alpha with capital to the alpha. And then in year 2, you start with 3,000. And let's say you do 2% a month. That's about 30% a year. Compound that now for 10 years, never spend a penny. Once again, now you're talking about 10 years you don't get any gratification. Well, what's your gratification? Buying yourself a TV or a car, or having a sustainable business that will last forever. Whatever makes you happy, bro. Okay? So if you're focused on building a sustainable business, man, then you go 10 years compounding at 30%, and you're 3,000, okay? 4,000, then 5 something, then 6, and then it's 8,000, and then 10 and 12. And all of a sudden you're getting pretty close to, let's say, 25 grand. And maybe from that, you can earn enough money to live wherever you live. I don't know where you live. But the issue is there's only 2 things that matter. Once you got your skill and your mindset and all that, that's your alpha. But in the math of the spreadsheet, how much did you start with on day 1? How much money? How many assets under management? And what is your consistent low risk return over time? Is it 8% a year, 12% a year, 15, 18, 22? Remember, you want as low risk as possible. And now it's just math. How much time? So there's really 3 things. How much did you start with? What are your consistent returns? Consistent. We don't want volatile. Okay. What did you start with? What are your consistent returns? And how much time do you have before you die? The more you start with, and the longer you trade, are the things you want to increase. The thing you want to decrease actually is your your return, because a return is a function of risk. So if you're making 40% a year, tone down the risk. Compound maybe 1 or 2 years at that rate, but then lower some risk. Lower your lot size relative to your account. And then you have another good year. Lower your lot size. And by year 10, year 12, your lot size relative to your risk or account size, your risk is quite low. You have consistent returns. You love what you do. Well, there you go, Devin. Yes. So how do you start with $30? Yeah, you don't. I mean, look, I could get a lot of viewers if I just showed you how to turn $30 into $1 million. But I just did. But most people don't like that. Okay? So you're smart. Okay? You are either formally or informally educated, so it means you can learn. It takes a while to learn whatever languages you program. It doesn't matter, but it takes a while, okay? It takes a while to understand what, and improve as a developer, right? So you're capable, you're focused, you're driven. I don't know any lazy programmers. Well, maybe on Upwork. But anyways, you have all that and you have a good gig. So I would save whatever amount of money you could save. And humans don't have a good mind about time. Our lives are so endlessly long, and then all of a sudden they're terribly short. Like, our minds are really strange. So if you're like, how do I start with the $30 account? If you have a day job, save $30 a week for 2 years. And you're like, I can't do that. Okay, save $30 every paycheck. Okay. Another one is I mentored a guy many years ago, and he was just starting to get good. I made some tweaks here and there, made some changes, and he was just starting to get good. And he's like, now what do I need to do, Wayne? And I'm like, well, I'm very concerned about the lot sizes you're starting to take. Your confidence is still ill-founded, even though you have profitability. I don't like the lot sizes. You're too much risk. You're making too much money. I want you to slow that down. I said, the way you want to be able to trade that lot size is, well, you need more assets under management to make the math. It's lower risk relative to your capital. So you either lower your lot size or you increase your capital. It's just math, one or the other. And he's like, well, how? And I'm like, go through your house, go through your garage, go through your attic. There's tons of stuff that you've probably accumulated over time. Lawn darts from a party you did 8 years ago and you've never played since. Okay, go through your garage. Floaty toys for your pool, car parts, whatever. Just go through everything. Go through everything and sell it. Convert it to cash. If you don't need it, sell it. It's not even a sacrifice. Convert the asset into cash, put the cash in your trading account. And he came back about a month later. I met with him for another mentoring session. He's like, I went through the garage, sold a bunch of things, went through the attic, went through the basement, sold a bunch of things. My wife found a bunch of things she hasn't been using. She sold those to put in the trading account for me. He's like, I sold one of our cars. I needed to fix it up. We hadn't been using it. So I fixed it up a little bit and I sold that. And then he said, I sold my dog. Dumbass said, what? I sold my dog. And I melted. I slid right out of my chair. You're like, wait, what? You sold your dog? He's like, and I love my dog. But I need Forex to work, and I'm willing to make the sacrifices necessary for my long-term sustainable business. And I said, holy smokes, man. I'd bet on you any day. Amazing, wouldn't it? Is that the type of person, if you were an investor you're like, man, I want to throw some money at a Forex guy. Well, wouldn't you be at least interested after knowing this person's profile? Wouldn't you at least like to see their track record? What if you looked at that first before you even looked at track records versus looking at track records, picking traders? All right, so let's do a summary and then call it a day. I said bulls are going to buy, bears are going to sell, and pigs are going to get slaughtered. Okay? Bulls are going to buy, bears are going to sell, pigs are going to get slaughtered. Go to the stock markets. Oops, wrong one. US stocks is what I want. Okay, I said bulls are going to buy, bears are going to sell, pigs get slaughtered. Okay, bulls are going to buy, bears are going to sell, pigs get slaughtered. Bulls are going to buy, bears are going to sell, pigs get slaughtered. I also said many retail traders want the volatility. I said, well, the danger of that is you will be like a dog chasing its own tail. It's never successful, and it always stinks. Think about that. Genius, genius, genius. So again, my name is Wayne McDonald. I'm the chairman and CEO of the International Association of Former Male Supermodels. And I'm also a YouTube guru. Oh my God. But I want you to succeed. Doesn't harm me if you succeed. So I'm looking out for you. I'm building all the tools. I'm building all the resources. Many are cheap and free. So look at the description below today's video. Find what you need. Been doing this for over 20 years. A lot of resources have been made for people just like you asking for the exact same help that you need. It's there. Have a wonderful trading day. Tomorrow there's no live stream. I will be at the Council of Investment Advisors. I guess I should bring that up one more time. Let me bring that up one more time. Investor Boot Camp. Hang on. Would you like to manage $50,000 of my money in my corporate account at an institution, a Wall Street institution, with a tax ID number, like as real can be? We are really going to manage real money. We'll probably have to make decisions on about $25,000 worth of investments. I'm adding more and more money. It's only going to get bigger and bigger and bigger. We have the unofficial goal of turning it into $1 million or more over time, over long periods of time, with the lowest amount of risk possible. If you want to manage money for an endowment, that means the money will last forever and continue to produce income every day. Think about this. If you had $1 million, imagine every year you could donate $80,000 to $100,000 a year to your favorite charities. Year after year after year. So 10 years goes by and you've donated $1 million to charity, but you still have $1 million in the account. Would you like to do that? Is that your goal in life? I can teach you. If you want to live on that kind of income, you have $1 million saved, but you want to retire and live on $75,000, $80,000, $90,000, $100,000 a year of income. And 10 years later, you still have your $1 million. Your life savings is still there. I can teach you. If you want to work for a nonprofit, if you want to be a money manager, managing other people's money, and you're interested in real world portfolio construction and management, not the nonsense they teach at universities, I can teach you with my money. Hey, none of my Harvard professors said, here's 50 grand of my money. Let's talk about how to invest it properly. No, they read from a textbook written 14 years ago. Back when 60-40 still made sense. This could turn into the most important thing I've ever contributed to our community. This might end up being a life work for me. And tomorrow is the first meeting. Okay? And I'm hoping and assuming you know nothing, and I will teach you everything. And then we will do it together. And you'll have real-world money management experience put on your LinkedIn profile. Peace on earth. May the pips be with you. May your profits be above average. I won't see you until Thursday, unless you join the CIA group now. Have a wonderful day. Cheers.